Is the US government shutdown about to stall the approval of spot XRP products? What does this really mean for XRP investors? Welcome back to Crypto Labs News. Today, we're diving deep into how the shutdown could impact upcoming XRP ETFs and what's next for Ripple and the broader crypto market. Let's jump right in. Attorney Bill Morgan pointed out that XRP is struggling to stay above $3 even as Bitcoin continues to hit new highs. Bitcoin and Ethereum currently dominate the ETF market after their spot products were approved, but the SEC has yet to move forward with other altcoins, including XRP. The big question now is, how long will the delay last? Here's the situation. The US government shutdown has directly frozen progress on new ETF approvals, including the highly anticipated spot XRP ETFs. The SEC has paused nearly all non-emergency operations, which means ETF filings and reviews are at a standstill until Congress restores funding. Now, does this shutdown have anything to do with crypto itself? Personally, I don't think so. This seems more like a political battle between parties than something targeted at digital assets. But it still affects crypto investors since the SEC can't process or approve any new ETF applications while most of its staff are furloughed, even though electronic filing systems like Edgar are still open for submissions. No progress will be made until the government officially reopens. That means all crypto-related ETF applications, including those for XRP, are on hold. This delay adds to regulatory uncertainty and pushes back the expected timeline for ETF launches. Several XRP spot ETF filings were set for SEC deadlines between October 18th and 24th. Many analysts believed October could be the month we finally saw approvals, but the shutdown has completely stalled that momentum. When operations resume, the SEC will face a massive backlog of filings to process. Optimistically, that could lead to a wave of ETF approvals all at once, and XRP, already near the front of the line, could be among the first addressed. If for some reason the SEC keeps dragging its feet after reopening, you can bet XRP lawyers won't stay silent. There's a growing sentiment that the community is ready to take legal action if the agency continues its endless delays. So, who's in line for these XRP ETFs? Major financial institutions like Grayscale, iShares, Bitwise, Canary Capital, WisdomTree, Franklin Templeton, and CoinShares, and even rumors suggesting BlackRock may file an iShares XRP trust. If the SEC ultimately approves these products, it could trigger massive institutional interest, especially once Ripple secures a U.S. banking license and more corporations begin using XRP for treasury management. This vision, where Ripple challenges Swift and XRP becomes a global liquidity bridge, is what many in the XRP community have believed in for years. Speaking of recognition, Ripple just earned another major award. At the recent Pay 360 Awards organized by the Payments Association, Ripple won in the Best Innovation in Digital Currencies or Assets category. This win highlights the company's real-world impact on digital payments and cross-border settlements, especially in the UK, Europe, and beyond. Ripple credited its clients, partners, and hardworking teams for making that success possible. Meanwhile, let's talk about some big institutional moves. A Morgan Stanley Global Investment Committee report recently recommended that clients allocate 2 to 4% of their portfolios to crypto and digital assets like Bitcoin. If that happens, it could represent $164 to $328 billion flowing into crypto from Morgan Stanley's $8.2 trillion in assets. If XRP captures even 5 to 10% of that allocation, we're talking about $16 to $32 billion going directly into XRP. And that's just one institution. Globally, if we consider the $162 trillion wealth base, even a 2 to 4% crypto allocation could mean $3.20 to $6.40 trillion heading into blockchain assets. Digital Asset Investor even suggested that in the future, these allocations could reach 30 to 40%. That would represent tens of trillions of dollars moving into crypto, and if XRP captured even a fraction, the price impact would be enormous. Now, let's shift focus to Asia, specifically South Korea. Ripple's senior vice president of RippleX, Marcus Infanger, recently discussed the future of stablecoins and XRP's growing role in Korea's digital economy. He explained that US dollar stablecoins and Korean won stablecoins aren't competitors, they're complementary. Dollar-backed stablecoins support international trade, while local ones enhance domestic payments. Infanger emphasized that stablecoins could link global liquidity and simplify cross-border transactions, with South Korea being one of the most active crypto markets and reportedly holding around 25% of retail XRP supply. The country is positioned to be a key hub for Ripple's ecosystem. He added that XRP could soon evolve beyond a simple trading asset into collateral for financial instruments, supporting on-chain lending, DeFi, and tokenized finance. Several projects like Axlar, Doppler Finance, and Giron Wallet are already exploring how XRP can be used across decentralized financial platforms. Crypto. Aries summarized the interview by saying XRP is transcending its role as a speculative asset, becoming a high-quality collateral and liquidity bridge in the new financial system. Ripple's upcoming Rus stablecoin is also designed to enhance cross-border liquidity and complement regional stablecoins like Korea's KRW-backed versions. This aligns with Korea's Phase 2 Virtual Asset Act, which promotes interoperability and broader digital finance integration, laying the foundation for full-scale institutional adoption within the next 12 to 24 months. Finally, Coinbase CEO Brian Armstrong also weighed in on U.S. crypto regulation. He said a new bipartisan bill is advancing through the Senate that will define market structure for digital assets, including Bitcoin, Ethereum, and potentially XRP. This legislation aims to resolve long-standing confusion about whether certain assets are commodities or securities, an issue that has been heavily politicized under Gary Gensler's SEC. Armstrong noted that the bill has strong bipartisan support and could become law soon, despite opposition from traditional banking lobbyists who want to limit rewards on stablecoins. Banks fear losing customers to DeFi and stablecoin platforms that can offer 8 to 10% yields, compared to their own low savings rates of around 0.4%. It's ironic. Banks had every opportunity to engage in crypto innovation years ago, but now that the technology is taking off, they're trying to slow it down. That's all for today's update. If you found value in this video, don't forget to like, share, and subscribe to Crypto Labs News. Leave a comment below with your thoughts on the XRP ETF delay. Do you think the SEC will finally move forward once the shutdown ends? Thanks for watching. Have a great day, and remember, nothing in this video is financial advice. It's for informational and entertainment purposes only. Always do your own research before investing. See you in the next one.